RSI, Relative Strength Index, which is widely used in a technical analysis. And there are so many videos available on YouTube that talks about what RSI is, what are the oversold and overbought conditions, and blah blah blah, right? But these videos do not help much when we come into the actual trading, because many times we see RSI is overbought, but the chart still goes up. And same thing with the oversold conditions. And also, we see one more phenomena that if you look at minute chart, it might show RSI is below 30, is oversold. Okay, but hourly chart and day chart might tell you a different story. Maybe it doesn't show the oversold condition of those two charts. So this is confusing, right? So what should we do now? So in this video, for the first time with a live example, I'm going to tell you how to make an entry into the market when the RSI is below 30 or above 70, together with what other factors we need to consider to make a smart entry into the market. Okay? I'm offering this video to you, but you have to give me one favor. Please subscribe this channel and like and share this video. Okay, so let's get started. We'll talk about RSI in general for a minute or two, then we will jump into the live example. Okay, let's get started. Okay, so in your screen you are seeing this formula. This is how we calculate RSI. RSI equals 100 minus 100 divided by 1 plus RS. RS is basically a relative strength. Okay, so we calculate RS using this formula, which is RS equals average gain over past n periods divided by average loss over past n periods. For example, if you want to calculate RSI 14, in that equation we will use 14 as n periods. Okay, so we'll use RS equals to average gain over past 14 days, average lost over past 14 days. So in that case, RSI of 14 would be 100 minus 100 divided by 1 plus RS 14. So remember, we calculated RSI of 14 days. Okay. Similarly, you can calculate the RSI for hourly chart. In that case, you will be using the hour for the n periods. Okay. Most software considers RSI greater than 70 as overbought and less than 30 as oversold. Okay. Now I'm going to give you some practical examples that will tell you how RSI can be used smartly in our trading. Okay. Okay. So you are seeing this chart. This is for Tesla, last 10 days, 30 minutes. By the way, this is a live chart. So this is the situation for today after hours. Okay, right now the market is at 765. Okay, so before we move on to the live practical example, let me tell you one thing. So, in the beginning, I told you that sometimes even if the RSI is above 70, still the market goes up, right? And same thing for when the RSI is below 30, the market can go down. Okay, so take a look here. RSI was above 70, and if somebody make a sell here, he would end up making loss because market went up. See that? At least 40-50 point. Same thing here. See, somebody make a sell here. It's above 70 right now, and market dropped a few points, but again it went up. Okay, if somebody make a sell here, he would end up making a loss. Okay, so same situation we can find on the oversold condition when the market is less than 30, when the RSI is less than 30. But right now I don't see any example here. Okay, now I'm gonna give you one practical live example that will tell you how RSI can be used smartly for your trading. Okay, I will stick to this 30-minute chart for now. So right now you see that market is at 765 and the RSI is below 30, right? So this is a good buying opportunity. It tells that market is oversold. Let's take a look 1 hour chart and see what it says. So the 1 hour chart is close to 30, not below 30. So it's not a perfect buy situation in the hourly chart. Now let's take a look at the daily chart. So daily chart says mark RSI is at 62, which is not a oversold condition. So daily chart does not suggest we need to buy. Okay, let's go back to 30 minutes. So this is a very difficult situation for us. Okay, so each chart is telling a different story. Okay, and you notice one thing, as we move forward from minutes to hour, hour to day, you see that the RSI is increasing. Okay, so this is another thing that you need to think about why that is happening. Okay, let's move to 30-minute chart. I think I'm still on 30 minutes. So according to my assessment and my opinion, this is a good buying opportunity and I would make a buy here. Okay, why is that? Because some other factors are contributing to this buying trend. Okay, for example, take a look here. Market made a bottom here past few days, which is 755 or 56. So that is a first support level for Tesla chart. So I would say around 760 would be a good buying opportunity, because if it breaks 760, it can go further down. So, but my feeling is it may not break 755 or 760. Okay. And second important thing is Tesla made an earning announcement yesterday, and it was very positive, and it was basically a major surprise, right? So that tells that Tesla is on the buying trend. The second thing is a Tesla price target. So at least two analysts, one from Goldman Sachs and one from Deutsche Bank, has raised the Tesla price target to above 800. Okay, one of them basically raised to above 900. Okay, so that's still that's again a positive news. Okay, so this tells me even if market drops below a few point, it will come back again. So you have to hold your patience. Okay, so and let me tell you my situation. I personally made a buy at 769 before the market closed. Okay, because I think that was a good buying opportunity. So let's see if I end up making any profit or not. Okay, so I gave you this example because I actually made a buy entry using this level today. Okay, so that's why I say this was a practical live example for you guys. I hope you liked it, and I can give you more example in the future, but I need you to please share with me your thoughts in the comment section. Okay, and maybe in the future I will talk about bullish and bearish divergence and how we can use those in trading in future videos. So I request you to please subscribe my channel, like and share my videos. Thanks for watching, and talk to you next week.